So it looks like there is at last some sort of relief coming for the Strata insurance issue that has been plaguing BC since early 2020. If you're an owner of a Strata property here in BC, and specifically in my marketplace, Surrey or the Fraser Valley, please click and subscribe. This is going to be some great info for you. So what is this possible solution to the massive issues going on in BC Strata insurance? The government has convinced the insurance companies to end what they call best terms pricing. What does best terms pricing mean? Well, it's a little confusing, and to tell you the truth, you might be a little bit alarmed and maybe a little disgusted, like I was, to learn what the practice means and exactly what was going on. We didn't even really know. Well, I didn't know what was happening. I'm not in insurance, but I didn't know what was happening. But it kind of was timely. I'm wearing my Keep the Change, You Filthy Animal Home Alone Christmas t-shirt. And well, this kind of has something to do with that. So watch this. The Vancouver Sun ran an article on December the 2nd from Jennifer Saltman that I thought was an amazing article, actually outlining this whole thing. They explained the situation very well. And I'll be using information here in this video from that article because it's the best explanation I've seen yet. And down below, if you're watching on YouTube, there will also be a link to the Vancouver Sun article. So first off, this found that 94% of strata properties in BC were negatively affected by what they call best terms pricing. Overall, it was found that the insurance premiums were up 27% higher as a result of this practice. Now, it's thought that on average, strata insurance policies went up by in 2020 by 40% on average. Personally, I've seen 200 and 300% increases. So I'd be super interested to see down below here in the comments what your personal strata insurance went up, if you know that policy, or I guess it's not your personal, it's your overall strata's policy, what that went up. Now, you may not know this number unless you look into your strata documents, but you could even post down how far up your personal monthly strata fee went up. So the article I'm referring to here actually had a hypothetical example of exactly how best terms pricing works. And I'll share those with you here now. I don't know how realistic this example is because it breaks down such a small, like, homeowners in one strata. However, I do think it illustrates the whole situation very, very well. It points out the concept kind of perfectly. And I'd also like to thank Emma Stewart for Remax for making these possible as well. All right, so let's get right into it. Here's how best pricing works. Let's use the example that was in the Vancouver Sun. In this hypothetical example, a 4-unit townhouse building needed a $5 million insurance policy, right? It seems fair. How best term pricing works? Well, a broker needs to find, in this case, 9 insurance companies into the policy to kind of amalgamate the policy, ranging from one that will take as little as 2.5% of the overall policy all the way up to 20%. So they kind of parse out one policy into these all these different companies that will take on certain chunks, either whether it be water or certain percentage of the overall policy. So the insurance company, you can see in this slide here, the insurance company takes on a certain percentage of the policy, and there's up to 9 of them in this example. So let's keep going. In addition to taking different amounts of the policy, each company charges different rates. Like, they can quote whatever rate they wanted, but under what they call best terms pricing, the most expensive rate is now applied to the entire policy. So even though you were company 1 that charged less, you now get the better rate. So this means that even if one of the owners of the policy has a very, very small amount of the policy, they can actually charge a little higher rate, or maybe they're the linchpin, they're charging more, and it actually will push up the rate of all the other companies and push up the quote as a result. So let's go back to the slides here. The next one, under best term pricing, all companies are paid the highest rate. So they collect the higher rate. They actually, even though they quoted a lower rate, they will now collect the higher rate from the strata. And back to the slides. So in this example, the whole overall policy now costs $12,000. But if each insurance company actually just charged what they quoted, that exact same policy would come down to just under $9,600. So overall, under best terms pricing, the hypothetical, this is all hypothetical, insurance policy was almost 25% more than if the shared policy was billed at the individual rates that were actually quoted by the company. And then it gets down into the breakdown of what each owner owes. Now, policies for most stratas will be much larger than this, and they would owe certain amounts as well. So that's where I think this kind of falls off. There's not a lot of four unit stratas within BC. But this is super interesting, right? I mean, who knew that this was happening? I sure as heck didn't. The good news is that the BC government has put an end to this practice effective January 1, 2021. So in the coming month here, this doesn't fix it all completely. I mean, BC Strata Insurance still has all sorts of other issues going on. But within the last year, it is a huge step in the right direction to try and get those costs down. Again, if you are a strata property owner anywhere in BC, specifically Surrey and the Fraser Valley market, and you would like to stay up to date on exactly what's going on in your marketplace, please click and subscribe.